Good morning, everyone. Thanks for staying on board or coming on board to hear a little bit about Pan Asia Metals. So my name is Paul Locke. I'm the Managing Director. I've been, myself and David Hobby, the Chief Geologist, have been involved in Southeast Asia since about 2012, focusing mainly on the Southeast Asian tin tungsten belt, but other areas in ASEAN, so ASEAN in particular. Just the standard disclaimer before we start. I'm sure all of you can speed read, so I'll leave it to you. And here we go. So we've got a pretty deep philosophy behind our company, and we want to be here for a reason. So a bit of why and how we matter, why we're here, why we matter. We're part of the new energy revolution. So we're focusing on metals which are for new energy applications, so EVs, batteries, and so on. So we're here with conviction, integrity, and determination. We want to build a great company with a great future. And why we matter, because we're exploring for metals that actually make a difference. So we are exploring for battery and critical metals that will power this new energy future. We're all about reducing our impact, so any impact we have will always be offset by what we produce and the activities and commitment to our local communities. And what we produce will benefit a global society. And then what we do. So we have 4 highly prospective exploration projects in the Southeast Asian tin tungsten belt. These projects we've identified over around 9 or 10 years, and we're slowly building up the portfolio. So we're looking for projects which will allow us to produce advanced higher margin products. And also we want a very low to zero carbon footprint. So we're looking for projects which are going to be low cost and also situated in an environment where we're not burning a lot of fossil fuel. Our ultimate aim is to refine and value add what we produce. So we really want to head further down the value chain into value added and precursor products or chemicals. And ultimately we want to be involved in this part of the supply chain. So we're all about identifying projects which really do allow us to move past the mine gate. If we're stuck at the mine gate, we're not really too interested. As I said at the start, we've been in the region for over 10 years, so we understand the region very well. We have, as we're focused in Thailand, that's where most of our infrastructure is. We have a resident team of 7 Thai employees, including 3 geologists, which during the COVID time has allowed us to continue working without huge interruption. Because of our tenure in the region, we're well known and respected by local businesses, communities, and the relevant ministries and departments in Thailand and also other countries nearby. So there's more than just identifying a project, drilling it out and waving the flag. What we're looking for are projects with the right operating cost dynamic. So this chart on the screen here, or these 2 charts, I'm referring to the left-hand chart. Oh, that's no good. The left-hand chart. So what we want to be is down here in this bottom quartile here. We're looking for low-cost projects which are robust in a low-price environment. So the reality is that all commodities go through low and high cycles. So in lithium, it's all great right now because lithium prices are high, but there will be lows. So we all remember that in 2017, lithium prices were very high, but then we went through a low and we saw a few projects crash and burn. So we're looking for projects which will get us through those lows and so have a robust future, long-term future. And then on the right-hand side, we're all about value adding. So I mentioned that we want to move past the mine gate. Our view is that when you're at the mine gate, the only margin you're going to make is subject to the commodity cycle. If you get past the mine gate, you've got more customers, more opportunities to extend further downstream, and generally the volatility in your earnings and your margins will dampen a little bit. So really this chart says it all. Here we've got 4 blue circles. So we're exploring and developing. We want to mine to a concentrate and then process that. So here we're moving past the mine gate, and then we're looking for opportunities to refine. So it's a pretty big call for an explorer to say we want to be refining precursor and cathode materials. But as the only lithium explorer in Southeast Asia, as a company which is situated between the highly advanced industrial economies of Thailand and Malaysia, we are in a position to negotiate and look at opportunities to value add what we produce. So given our style of projects, which are lepidolite, we will definitely move past a concentrate into an LCE, whether that's carbonate or hydroxide has yet to be decided. But if we have an LCE, lithium carbonate equivalent, then we are in a realistic position to do a joint venture where we can work with the party which may be producing PCAMs and look at producing a cathode active material or something like that. And then we'll be delivering into the manufacturing, LIB manufacturers and EV producers, which are in Southeast Asia. So there's quite a large number of EV producers in Southeast Asia and Thailand, and they're emerging battery producers. So this is a realistic business plan. We're all about low cost environment, and this goes back to being near the bottom of the cost curve and having a robust earnings during the low parts of a commodity cycle. So in this chart, or in this page, we've got 3 charts. The top right-hand chart is a measure of underground hard rock projects in Australia, and then 1 PFS for a small underground project in Thailand. And you can see that this project in Thailand, even though it hasn't got economies of scale, is still at the very bottom of the cost curve, so very low unit costs. And this is a good example of the Southeast Asian cost environment if you do it right. You don't need volume or economies of scale to still be competitive. And then below we've got 2 other charts, which are manager and staff salaries in the Asian region. And we can see here that Thailand and Malaysia are about middle on the curve, so it's low cost, but both have very highly educated workforces. I mentioned Malaysia here because obviously being in the tin tungsten belt, we're always looking at Malaysia and other surrounding countries in ASEAN for opportunities, and Malaysia we've spent a lot of time in. And then just a bit of the geography. So our projects are located here. Our Rio Kit Lithium project is just north of Phuket, about 30 minutes, and all of our projects are within a few hours drive of each other. And we're right in the middle of the emerging EV and LIB industries in Asia. So once we're producing lithium carbonate or hydroxide, our markets are clearly, our first market is Thailand. But if we have surplus, then we've got markets emerging in India, Malaysia, and then in East Asia, which is clearly China, Korea, South Korea, Japan, and Taiwan. So we are literally in the center of one of the largest GDP growth regions on Earth, one of the largest populations, and one of the largest EV and LIB, emerging EV and LIB manufacturing hubs. In Thailand itself, Thailand has geared up for EV and LIB manufacturing. They're offering 10-year tax breaks for advanced material producers. So if you're producing a cathode active material, a battery or an EV in Thailand, you'd get fairly good, very good treatment. And as an indication, these auto manufacturers here, most of these have signed up to produce EVs. Thailand's the largest auto manufacturer in Southeast Asia, the 4th largest in Asia. And Thailand has an S-curve policy, so they're aiming at all of the growth industries, and they want to be downstream in advanced materials and applications. So it's a very good place to be for a company like ourselves. Then we come to cost curve, and this is the most important thing at PAM Asia. We're all about cost curve. So we can see here 4 lithium styles. We've got spodumene at the top with Chinese conversion, and this is showing an operating cost of around just under $7,000 US dollars a tonne. They're clearly lower cost spodumene operators, but this is on average. Then we have brine operations at around just under $6,000 a tonne if they're processing to lithium hydroxide. And then geothermal, which is lower. This is Vulcan's estimated cost based on their PFS. And Pan Asia has geothermal projects under application in Thailand. And then lepidolite, which is what we've been targeting for many years. So lepidolite, based on peer groups, is the lowest cost source of LCEs. And the reason for this is the large range of byproducts. So we want projects down here. Importantly, on this slide, you'll note on the left-hand side, the grades. So there's a lot of focus in the market on grade. We think that's a mistake. You can see here lepidolite at the bottom of the cost curve at 0.43% Li2O in their resource, whereas we've got spodumene here at 1.3. So grade is not the only reason for a project to be low cost, far from it. Just a quick shoot through the markets. Clearly, there's a lot of action in lithium. The markets, I think, accepted that EVs are going to be here for a long time, and so it's a big growth area. So our company itself is really focusing on securing more projects, as we think this is going to be a long-term play. So Pan Asia Metals has 3 distinct advantages over the competition. We're in close proximity to our inputs and markets, reducing costs and our carbon footprint. We're located between the low-cost advanced industrial centres of Thailand and Malaysia, and we're positioned to move beyond the mine gate and produce and deliver a low to zero carbon footprint, which we think we can do. So a little on the projects. Our key project is the Rio Kit Lithium project. This is located just north of Phuket. When we could fly here from Sydney, Australia. We'd be here in the afternoon on site later that afternoon. So very easy to access, a lot of good infrastructure, but this is not a built up area. This is a lot of farmlets. So in this project, you'll note here that we've got about a 12-kilometre prospective trend. And in this, we have 2 key prospects. Down here, we have the Rio Kit prospect, which we're drilling at the moment. And up here, we have the Bangi-Tum prospect, which we'll be moving to very soon. Our aim at Rio Kit is to produce enough reserve to supply a 10,000 tonne per annum lithium carbonate or lithium hydroxide plant for 10 years. So 10 years means it's bankable. And if we're at the bottom of the cost curve, it should be banked. We're also located just south of a large hydropower station, and this may relegate the Rio Kit project to a near zero carbon footprint. So these power lines come pretty close to where we are. Just on the drilling itself, so this is the south end of about a 1 kilometre long trend at Rio Kit, the southern prospect. The Bangi-Tum and Rio Kit prospects themselves have about 2.5 kilometres of strike. In this project here, we've been drilling. We're close to finishing our drilling, and we'll start heading into evaluating a inaugural mineral resource. But you can see on this cross section here, which is this section here, C to C, that we've got a large pegmatite swarm. And the grades in this swarm vary from around 0.45% right up to 1.5%. So we've got several intersections here, 4.2 metres and 2.3 metres at 1.3 or 1.47%, and a composite intersection here of 30 metres at 0.72%. And down here, a composite intersection here of 25.3 metres at 0.72%. Now, what's important here, if we go back to that cost curve slide where I pointed out the peer at the bottom of the cost curve and their head grade, well, their resource grade was 0.43%. So we're nearly double here We're in a low operating cost environment. We're very close to all of our inputs and so on. So this leads us to believe that this project will be one of the lowest cost projects in the peer group. Some of you may be aware that earlier this month, on the 31st of August, we announced a new initiative for several block application areas to the north of Rio Kit for blocks which are but geothermal fields. So in this map, this is called the Catatong Geothermal Lee and Hard Rock Lee and Tin Project. There's 5 application blocks in here. 2 of them have geothermal fields in them, and the rest have old tin mines. So the blue circles are old tin mines. Importantly, this geothermal field here butts a lithium-enriched granite, and the background lithium grades here 2,700 ppm or 0.27%, which is extremely high. So we've got some work to do here, but this is one of the most promising geothermal lithium fields in the peer group. This is the same again, the Catatong project, and this is the same granite which I outlined in the last map. And you can see here a lot of high-grade lithium hits in these old block areas. These figures here are stream sediment grades. So we're approaching sort of 0.1% in stream seds, which is incredibly high. And there's a lot of old mining in here, tin mining. So we've got geothermal fields here and a pegmatite field here and tin mining through here. So we're pretty excited about this project and what it can do for the company. We also have a tungsten project, which we have done a lot of work on over the years. This project would be one of the most promising tungsten projects in the global peer group. It has over 10 kilometres of strike. The historic tungsten mine in here, they were producing or mining 2 to 4% grades. We have about 10 prospects. We've drilled 4 with a drill supported exploration target of around 15 to 29 million tonnes at 0.2 to 0.4% WO3. 0.2 to 0.4 is pretty good in the peer group, but a lot of our intersections are much higher in grade. This is one of our prospects, the Tampa West prospect, where we've been drilling very high grades, and this is from surface. So this intersection here shows 59 metres at 0.43% and 22 metres at 0.7, and so on. So a very exciting project, but not the one we're focusing on at the moment. Just to wrap up, our capital structure. So right now we have a market cap of just under 70 million. We just did a capital raising, 6 million placement and a $2 million SPP. The $6 million placement, half of that was filled in 4 minutes and the rest in a couple of hours. And the SPP was open for about 2 days. Management has quite a large shareholding, so board and management are just over half the company. One of the largest shareholders, and Ty Goldfields and David Doherty are 2 other directors. So we've got a lot of skin in the game. Our shareholdings are locked up for another 12 months. We floated in October 2020, so we're not going anywhere fast. And when they're released anyway, I'm here to build a company, not to sell my shares. So we're here for a long time. It's good for other shareholders. So just to wrap up, we're right on time. Pan Asia Metals is the only lithium producer in Southeast Asia. 3 lithium projects, 2 with very promising geothermal prospects on them. 1, the Rio Kit Lithium project. We're heading through to an inaugural mineral resource and a scoping study pretty soon. We hold the Catatong Tungsten project, so it's a potentially world-class project. Tungsten's the #1 world's critical metal. China's most of the supply, and the Catatong project has a very large drill-supported exploration target. Asia provides us with numerous geostrategic advantages, key cost environment, position to the advanced industrial centres of Thailand and Malaysia, and then the LIB and EV markets. And we're exploring for a better future. So we're looking for the minerals which actually add value, We have a reason to exist. We're well respected in our communities, and I think we can build a very strong company.